Hey everyone, welcome back to Corporate Decoder, the place where we go behind the curtain of big business and where today's report is so long, it makes a CVS receipt look like a sticky note. Let's crack open Anebulo Pharmaceuticals' latest annual report to see if this company is on the fast track to success or stuck in a clinical trial waiting room. This is a Form 10K, basically the company's annual check. Up report to the government telling us everything that happened over the past year. Think of it like a year, end report card for a business. Now before we dive into the nuts and bolts, they've got this whole section about forward-looking statements. This is basically them saying that a lot of what they talk about for the future might not actually happen, and they're not responsible if it doesn't. So, we'll take their future predictions with a grain of salt, like a hint of salt on a fancy dish you're not sure about. And then, oh boy, do they list risks. It is a whole symphony of things that could go wrong, from not making any money, to relying too much on their founder, to even their lead drug candidate having side effects. It is a what-if parade, and it is quite long. So, what does Anebulo Pharmaceuticals actually do? They are working on treatments for problems caused by cannabis, like when kids accidentally eat too much of it, or when adults get really anxious or paranoid from using it. Their main product candidate, called Silonabant, is supposed to quickly reverse these bad effects. They believe there are no other treatments like it that are as far along in development. With more states legalizing cannabis, they see a growing need for something like their drug. Their lead drug candidate, Silonabant, is like a key that blocks a certain receptor in the brain that cannabis affects. They have patents protecting this idea and have formulated it for both pills and IV injections. They're looking at a pretty big market because cannabis is becoming more widely available, and that means more people could end up with cannabis-induced issues. They specifically point out that edibles like gummies and candies are a big cause of emergency room visits, especially for children and even adults, because it is easy to eat too much without realizing it. Their big plan is to get this Silonabant drug approved and out there. They are focusing on an IV version for kids first, hoping it might clear the path faster for getting approval, compared to the pill version for adults. They also want to find partners to help them sell the drug once it is approved. Long ago, experiments showed that Silonabant could block cannabis effects in mice and seemed safe in early human studies for obesity. They've done studies called Phase 2, where they gave people THC and then Silonabant. The results seemed promising, showing Silonabant helped reduce the feeling of being high and improved alertness. Now, a little bit of a twist here. A lot of their work on Silonabant comes from a license agreement with a company called Vernalis. They are paying Vernalis a bunch of money if their drug is successful, which is pretty standard in the drug development world. They say the drug world is competitive, and they mention a few other companies that are also working on cannabis-related treatments. They also acknowledge that other companies might develop similar or better products. This is a huge part of the drug business. They have to get approval from the Food and Drug Administration, or the FDA, and that is a long, expensive, and tough process with lots of rules and studies required. They go into a lot of detail about all the steps involved. Alright, let's talk about the stock itself. Their stock trades on the Nasdaq Capital Market under the symbol ANEB as of late September 2025. The stock was trading at $2.4 per S-share. They have about 15 major shareholders keeping track of things. Importantly, they do not plan to pay dividends, meaning they'll reinvest any profits back into the company instead of paying them out to shareholders. This number tells us how much the stock held by people who are not company insiders is worth. For Anebulo, it was about $15 million as of the end of 2024. This tells us there are over 41 million shares of the company, stock out there. It is a lot of pieces of the pie. This is where management talks directly about how the company is doing financially. It is their chance to explain the numbers and give context. They are repeating that they are developing treatments for cannabis toxicity and that their main drug is called Silonabant. They re-emphasize the growing market due to legalization and the emergency room visits increasing. This is where they talk about how much money they are spending on creating and testing their drugs. For the fiscal year ending in 2025, they spent almost $4.3 million on research and development. That is up from about $3.5 million the year before. More money spent here means they are actively working on these new drugs. This is the cost of running the company itself, things like salaries for non-research staff, rent, and legal fees. They spent about $4.9 million on this in 2025, which is a bit more than the $4.7 million they spent in 2024. Putting those two together, their total operating expenses were over $9.2 million in 2025, up from about $8.3 million in 2024. Remember, this is before they even consider interest or other income or expenses. And here it is, the big number for the year ending the 30th of June 2025. Anebulo Pharmaceuticals had a net loss of over $8.4 million. This means they spent more money than they brought in, which is common for companies still developing drugs and not selling anything yet. It is a bit more than the $8.2 million loss they had the previous year. A small bright spot here is that they received some grant income, over $860,000 in 2025. This is money from organizations, like government ones, that helps fund their research. They didn't have any grant income in 2024. This section talks about how much money they have and how long it will last. As of June 2025, they had about $11.6 million in cash. They believe this is enough to keep them going for at least another year, but they'll need more money to keep developing their drugs. This number shows that their day-to-day operations are losing money, specifically about $6.3 million in 2025. It is less than the over $8 million they lost from operations the year before, which is a good sign, even though it is still a loss. This is where they got their money from outside sources. In 2025, they brought in about $14.9 million from selling stock. This is a huge contrast to the previous year when they actually used cash for financing activities, meaning they weren't bringing in new money from selling stock or loans. This is a peek at how their money has been raised. Back in 2022, they raised about $6.3 million by selling stock and warrants. Then in December 2024, they raised another big chunk, about $15 million, by selling more stock. It shows they've been actively raising money to fund their operations. Because they are losing money, they don't owe any income taxes right now. In fact, they have a lot of what are called net operating loss carryforwards, which are basically tax credits they can use in the future if they ever become profitable. Think of it as a tax coupon they saved for a rainy day. Right now, they have about $24.5 million in these tax loss carryforwards. This is about how they pay their employees and executives, not just with cash, but also with stock options. For 2025, they recorded about $1.4 million in costs related to stock options, up from $800,000 the year before. This suggests they granted more stock options to their team. This number tells you how much money they lost for every single share of stock they have. In 2025, it was a loss of $0.25 per S-hair. That is better than the loss of about $0.32 per S-hair they had in 2024, meaning each share lost a little less value in 2025. A positive trend even with the overall loss. They have a loan agreement, but interestingly, as of June 2025, they hadn't actually borrowed any money under it yet. It is like having a credit card but choosing not to use it. This loan agreement has some specific terms, including issuing shares of stock as part of the deal if they do decide to borrow money. Looking at who is in charge, they have quite a few directors, including people with backgrounds in investing, medicine, law, and finance. Their chief executive officer, Richard Anthony Cunningham, has a lot of experience in the biopharmaceutical industry. Their chief scientific officer, Kenneth C. Cundy, Ph.D., also brings extensive scientific expertise. For the year ended June 2025, their CEO, Richard Anthony Cunningham, earned about $993,000, mainly from stock options. Their chief scientific officer, Kenneth C. Cundy, Ph.D., earned around $602,000, including a bonus and stock options. The part-time chief financial officer, Daniel George, earned about $208,000 based on his hourly rate. This table shows a lot of stock options are still outstanding, meaning they haven't been exercised yet. It is a pretty big number of options held by the CEO and chief scientific officer, showing they have a significant stake in the company's future success. This is where we see who owns the most stock. Aaron R. English and 22NW Fund. LP own a very large chunk, over 50% combined Joseph F. Lawler. The founder also holds a significant amount. It shows there is a strong concentration of ownership, meaning these few large holders can have a big say in the company's decisions. When you add up all the current executives and directors, they own nearly 80% of the company's stock, which is a lot. Their auditors, EisnerAmper LLP, were paid about $192,000 in 2025 for their services, mostly for auditing the financial statements. This is a normal part of being a public company. This is the official stamp of approval from their auditors, EisnerAmper LLP. They re-saying that the financial statements presented are fair and accurate, which is crucial for trust. They've been the company's auditor since 2020. Looking at their balance sheet for June 2025, they have about $11.6 million in cash. This is a big jump from the $3 million they had in 2024, mainly because they raised a lot more money through stock sales in 2025. Their total assets are around $12 million on the other side. Their liabilities are pretty small, under $500,000. This table shows their income and expenses. As we saw before, they had a net loss of over $8.4 million in 2025. Research and development costs jumped up to nearly $4.3 million in 2025, and general and administrative costs also increased slightly. This shows how the ownership structure has changed. The number of shares outstanding increased quite a bit in 2025 due to selling more stock. The accumulated deficit, which is basically all the losses from the beginning, grew to over $73 million. This table tracks the actual movement of money in 2025. They had more cash at the end of the year, about $11.6 million compared to just over $3 million at the start. This is thanks to bringing in over $14 million from selling stock, which helped offset the money they spent on running the company and research. They reiterate their identity as a clinical stage pharmaceutical company focused on cannabis-induced toxicity. They also highlight that they have not generated any revenue yet and expect to continue losing money for a while. They acknowledge they'll need more money from outside sources to keep going. This note gives more detail about the deal with Vernalis. There are lots of potential milestone payments and royalties involved if their drug gets approved and sells well. It is a common structure in this industry, but it shows a significant chunk of potential future earnings could go to Vernalis. This confirms the private placements they had in 2022 and 2024, which were key to their fundraising efforts. It also shows the authorized shares of common stock have increased significantly over the years, allowing them to issue more stock. They're clear that they operate as one single business segment, and their core focus is the development of treatments for cannabis toxicity. All their tangible assets are in the United States. This is important right after the end of their fiscal year. In July 2025, they announced plans for a reverse stock split. This means they combine existing shares into fewer, more valuable shares. They're redoing this as part of a plan to go private delist from NASDAQ and stop reporting to the SEC. The main reason is to get their number of shareholders below 300, which is a loophole to avoid public company reporting requirements. They also mention new tax legislation that could impact them. So what is the bottom line with Anebulo Pharmaceuticals? Well, they are a company very early in its journey. They are spending a lot of money on research and development, which is expected for a drug development company. They did raise a decent amount of cash in 2025 by selling stock, which helps them stay afloat for now. However, they are still losing millions of dollars each year and have not generated any revenue. The biggest story here is their decision to go private and delist from NASDAQ. This is a significant move that will drastically change how the company operates and how investors can access its information. It suggests they might be looking for a less public, potentially less scrutinized environment to finish developing their drug. The success of this plan hinges on their ability to get that drug approved, and if they go private, on whether the investors who remain will have confidence in management's long-term vision. They are taking a big gamble by shutting down the public eye, but for companies in highly capital-intensive, long-term development like this, sometimes going private is seen as a way to focus without the constant pressure of public markets. It is a risky strategy, but the numbers show they are still very much in the early cash burning phase of their business. Now, do you think going private is the right move for Anebulo Pharmaceuticals? Let us know your thoughts in the comments below. If you found this deep dive helpful, make sure to smash that like button and subscribe for more corporate breakdowns. And if you want to join the conversation, check out our Discord channel linked in the description. Thanks for watching, and I'll see you in the next video.